So we're gonna get started. Um, First and foremost, try and stick with me through these next couple of weeks as we get through the holidays. It's been weird the last couple of weeks between some conferences that popped up, between my laptop just dying. I guess that's what I get for holding on to the same one for a really long time. Um, but my laptop died. There have been conferences that popped up. There's obviously the holidays. So, as much as I wanted to get through a good portion these last couple of weeks and the next coming, um, it just doesn't seem likely that with everything going on, everyone will be able to power through, me included. So, I have no problem extending the boot camp until we finish up. If we have to keep this slower pace through the holidays, but after we get through, if we can pick it back up, then we still could finish on time. But I guess what I'm saying is stick with me because we'll be flexible and make the most of the time we do have. I don't want to rush anyone through the holidays, and I don't want to snub anyone on time that we would have to go through specific things. So if it does come down to extending it a bit, then that's exactly what we'll do. But again, I do apologize for the last couple of weeks. I know it's been a little bit slow. I've had some really weird things pop up, and it's just been uniquely busy. Like right now, even though I'm in Boston for a conference for the entire week that we didn't really know about until the last minute. And I guess that's the joys of going through merger and acquisition. So now that that's out of the way, one thing that we're going to talk about today, well, two things. One thing that we're going to start with is we're going to look at fibs and convergence of fibs. So we started to talk last week about how to use fibs specifically tailored with trend because they are trend tools. There's ways to use them counter trend, and there's ways to take advantage of them, which I'm sure a lot of you know. But it's finding completions and it's finding extensions that complete at the point of convergence. So they build out smaller scale zones that you're looking for and start to formulate little areas on the chart that make for great trades, whether they're super precise on the lower time frames or a mini zone on the higher time frames for a swing. They do make really good opportunities. So, excuse me. That's one thing that we're going to be talking about. We are also going to be looking at doing a marking off a chart fib-wise and looking for the best opportunities and doing some pre-planning and getting into that planning stage off of someone else's chart from their chart library. So Tom graciously keeps updating his tracking channel periodically. So his is the latest I have, so I just grabbed his. But then after that, if there's time, what we'll do is we'll look at getting someone else's chart. Like, so having one of you take over and pull something off of your library on the 4 hour, and we'll look to mark that up. So because we'll likely be grabbing Tom's off of his chart library, I'm gonna prefer not to have Tom do it. So one of the remaining three of you on the chart, just be ready with your charts. And I think Vince said he's in the Philippines, so I'm not going to force him to do it because of his Wi-Fi. So that leaves either Brent or Moa. Just be ready when we get towards the end. If there is time, then I may be asking someone to jump on and share a chart. But all that said, let's get into it. So, like I said, fibs are great in terms of trending tool. You can see right here, it really makes the most sense for an extension or a move up and then a retracement down, a move up and a retracement down, a move up and a retracement down. That's the way that just about everybody will use fibs. Now, excuse me. Sorry. Now, most people around here probably also know. Oh, no, it's not you. It's not just you, Brent. It's everyone. I'm not sharing my screen. Now you should be. I apologize. I'm a bit slow moving this morning. Someone threw free Bruins tickets at me last night, and it went into overtime. So I was out much later than anticipated. So we are now looking at my chart. And as I was saying, everybody knows fib in the fact that it's a trending tool. That's what we talked about last time. That's what we started to look at last time. So naturally, looking at this chart, these retracements right here make for the best opportunity for fib. So if we were to just take this at its most basic, you look at fib and you say, what does this move give us? This move gives us a solid retracement back down to the 61.8. Likewise, if we were to take this and migrate it up, you look at this movement and say, what does this give us? It gives us decent retracement back down after this move to somewhere between the 61.8 and the 50. And again, similarly, if we look at this little mini move here, what does it give us? A solid run up and a nice retracement down to the 78.6, or I guess that's a 61.8. 78.6 is a little lower. So looking at that makes perfect sense. No reason that any of you would not understand that. And there's no reason that what we're going to talk about any of you would not understand, because it's fairly simple. Then you've likely done it before. But it's not something that you've likely conceptualized to the point where it's a main part of your focus in terms of your drawings. So now using only fibs, there's another recent move that makes sense, right? We're not going to get into impulse versus swing right now. That's something that we're going to start to talk about when we're looking at identifying unique anchors, because we're going to try and cover all of the anchors in one. So that's either going to be a random piece of content or next week. But if you look at this move right here, there's the decent move back down, and we're starting to work up towards that 61.8, the 78.6. And at the time, we also moved back up to the 50%. So we're going to use that 50% movement as an option to start talking about planning and building out your trade plan. So if you look at kind of what's around that area in terms of content and context, we've got a little mini wick with a little bit of change control property here, if you will, right around that 50% area. If we map back out that first movement, we've now given ourselves, and you can see this is the daily, so it's a little bit of it's given us a little bit of wiggle room, but you essentially give yourself a little mini zone with your completions. So what fib completions are the negative 23.6 and the negative 61.8, and they're inverse retracements. So when you make your way all the way back and you test something cleanly and you rebound out of those levels, and I typically look for completions to happen after we get a deep enough retracement to the 50 or the 61.8 or the 78.6. Sometimes, I will not look the other way if it does hit the negative 23.6 or 38.2, any of those shallower retracements, but I'm not typically looking for conversion off of that. It's more just confluence. But when you get something like this, where you get a solid move, decent and very clean retracement, then your extensions become really powerful tools, not only in terms of gauging the next little iteration of movement. So if you didn't get in right here, right, like if you were to look at, and we won't do this on the 4 hour because it won't let me go all the way. Oh, maybe it will. That's not terribly far back. Let's see. Oh, it did. Okay, so if you weren't able to get in right here, then you've got decent retracement back here, here, here. So you've got another couple opportunities. But what it gives you is the next, or what it starts to give you is a trend for the next little while that you can essentially build out once you get that positive momentum, right? So once we come out of that and clear, let's say the 50, we can now say, okay, any retracement, since I didn't get in here, any retracement that gets in here, at least until this little zone where we're at the recent highs and we're at the negative 23.6, I can almost assume that we're going to be looking for lower high or for higher lows and ride that trend up until it fills. So that just gives you a little bit of a bias for the next X amount of time. But what it does also give you with the extension formulating right around the time of that 50% retracement is that area that you can do something a little bit counter trend. Now, it's not always the case that the confluence is going to work out really well like that. Like right now, if you were to see where the 61.8 is, it's kind of in the middle of the 78.6 and the 61.8, the negative 61.8 that is, for an extension. But we're not done building out this chart yet. So we'll see if we can find some more confluence somewhere else for a potential pre-planned move. But looking at what this has given us, you come out of that 70 or that 61.8, you ride this trend, these little mini trends, all the way up to negative 23.6, and then we get a nice solid 1, 2, 3, 4, 5 days worth of a negative pop out of that zone. So if we're looking at this movement and we want a little bit more of that precise nature, you look at this run up that we've had, and you look at what we talked about early on with kind of leveraging some of that positive momentum to the upside for additional entries, but also additional targets. If we start to map this out and just see if anything pans out, then we could add just a little bit more confluence. And this is where you get into not forcing things on your chart, but instead just assessing your chart. See, that's not super clean, but our 61.8 is right in the area. So for the time being, I'd probably clear this off and just leave the two that matter and see if it makes sense within the context of the rest of the chart, right? Like clearing that off, it looks decently clean. But again, that's also one of the shallower retracements, the 38.2. That's not something that I'm always looking at. This right here is very clean off of the 50, which is great. Because now if I clear off the 50, and it's starting to get a little cluttered around there, so I know it's the negative 23.6. We didn't drop high enough. I'm just going to change this so that I give myself a better visual. And now we've just added a lot of confluence and a lot of structure that wouldn't otherwise be there to our little zone that we've built out. So all of that said, we've now added on both the daily and the 4 hour. We've measured out this entire run. So this entire run is just one big measured move, and we can now formulate a more precise entry based off of all of the completions to the upside. So if we clear all these off, when we get back, we've validated that this zone is a really strong zone of interest. You look at the next larger scale substantial move, and what that would be is coming out of your 61.8 up to where we looked short. Actually, let's use the last movement. Again, we won't get into why just yet, but we will eventually. So looking at what's taken place, So we've already had this movement out of here. Now we can build out our structure for an exit. So if we look at what's happened, what happens going upwards, the last bit of resistance, the last time that we had a few wicks that really acted as strong resistance and kind of was a springboard for the rest of that upward movement, was right here. So now I'm getting into a bit of trade planning with fibs and only fibs, right? We're not really using any other structure except for support and resistance. No trend, no supply and demand, no change control. So all we're looking at here is just a bit of trade planning. So you give yourself, this one actually gives us a precise level. So we're looking at this support right here and this retracement right here because they match up pretty well. So what I would do is get rid of anything that doesn't matter. I want to keep those extensions in case this trade plan does work out. But now we have our entry for counter trend and our exit for trend. So we're using trend as an exit and we're using our completions as our entry, which is kind of opposite of what a lot of people will do. But if we're looking for riding this the whole way up, there's no reason not to capitalize on this bidirectional swing, on this bidirectional move right here. So entering here or exiting here gives you another opportunity to enter in the same direction. Now, if we're going to talk a little bit about trapping the market right now, I'm going to transition into it and kind of leveraging pending orders, which is something that I don't often use, but in cases like this, even with manual entries, you can do it this way to kind of capitalize on it with spot forexes. So this is, and I think you can do it with futures too. Anything that's not Nadex. So let's say when we get up to this conversion point up here, we enter short. Did it again. Short one standard. So we're short one standard lot as we come out of this zone right here. We've got a very reasonable target now built off of fibs to the upside or to the downside, kind of leveraging that higher low momentum that we're looking at for the expected use of fibs. And we've got our target built out. Now, as price, let's say that price has gotten here, right? Let's say that price has trickled down to about here, and we're starting to make some decisions. Let's say we put a pending order pending buy to cover one standard lot. So let's say we put that pending buy to cover our short right at this level. That's one way to do it. That'll get you out cleanly. Then you can reassess. If you feel strongly about it and you want to leverage the risk and you want to leverage some of the equity, right? The benefit of doing this, and instead of entering long here and trying to ride it up the entire way and hit the home run, you can bite off little chunks of it. So let's say that we were long here, we took it off, we got short here. Now we've capitalized on this retracement because you have to assume that price is never just going to stay that resilient and that bullish and that bearish for such a sustained period of time. It needs a break. It needs to reset and reload. So as we come back down and reload, the benefit of this is we've now moved for 5 days bearish. We can reload and we can overcompensate on our buy to cover. So as we're dropping down, instead of we have a pending buy for one lot, if we overdo it and we adjust this and we set a pending buy for two standard lots, What this will do is it'll close out our short position, but it'll also create a buy position. So at the point in time when we exit, we'll also enter a bullish trade. So now what that gives us is since this trade is now over and done with, and we are talking about building out confluence and finding those extensions, let's reset our targets. Since we're trending up, we can get rid of the 50 on the bearish fib since we're trending to the upside. We've now entered a position here. We could leave this on, this negative 23.6 here, but since we used it to enter the trade, to short one to capitalize on it, I'm going to get rid of it. And now that I'm long here, right, I probably would have either taken some off or trailed really tightly at that negative 23.6 just in the event that we couldn't break above it, which we're still trying to prove that we can. But if you look at what we've now got with this retrace, or with this this retracement where we entered long, the negative 23.6 actually sits directly at that 61.8. And then this is where it becomes trading your plan, and this is where it becomes kind of assessing how you want to do it. Because what we give ourselves, if we were to plot this out, this support right, or this resistance right here, that's a bit far. That's not quite as precise and quite as small of a spot as that original zone we built out was. So looking at this, right, there's a lot to like. We've got the negative 23.6 and the 61.8 that are pretty lined up perfectly. Now there's not as much short-term confluence building out a reasonable short here, but if you think about the context of what we've done, we've now capitalized on a long coming out of these zones, a short coming out of this zone, and now another long, right? We're in the standard long we're in a standard lot long coming out of this zone with our overcompensation and buying out 2 instead of just 1. And that's the target off of that retracement. So because we've had such tremendous luck, well, not luck, but we've capitalized on this bullish run bidirectionally so well, we can do one of two things. If it fits your plan, here's your opportunity for another overdone sell-off. So if you were to set a pending short 1 or 2 standard lots. So we've now got the opportunity to either just capitalize on the run as a whole, and we'll just hit our initial or we'll hit our initial target off. We already hit our initial target off this, but we'll now hit our initial target off this. So we've got the option to just take our money and run, or if we are trying to plan for another run up, which you can see we get the 78.6 and the negative 61.8 off of, again, this same run built out right here with no real structure, mind you. This is just fibs. So if we don't think this is done and we want to capitalize on that run up, we can do a few things. We can set our We can set our pending order to take 1 off. Just be done with it and then reassess. Right? We could not capitalize on any retracement and look for something. Right? So if we come back up here and then come back down, look for something with some structure based off this and capitalize on another long to potentially take it up here. We could do nothing as we approach here. We could try and let it bypass the 61.8 and just trail our stops and then try and hit the home run and run it up there. Because we've had so much positive equity built into this trade, that's not a terrible option. Or you take the really aggressive entry and the really aggressive approach and set your pending for 2 standard lots here. We filled the 61.8, we filled the negative 23.6. So if you set your pending for 2 standard lots for a short, then this is again risky because it's a pretty hefty stop loss. But set your stop loss behind the negative 61.8 and the resistance right there. So set those two. Set your pending for 2 lots. Set your stop loss for 1, and take the risky trade. Now, if that gets you stopped out here, then there's nothing wrong with again taking another risk and setting a short entry at the 78.6 with a stop loss that's like super tight because there's nothing above it. So I would you could set another pending if we blow through your stop loss here and try and recoup that. It's not necessarily revenge trading because you've got reason to believe and you've built out the positive equity to do it, but it's kind of it does kind of fall into that category where you want to be careful and not overdo your trade and not overdo the aggression, because you can. So I'm going to take a quick minute. I didn't realize I spent like a whole half hour on that, but I'm going to take a quick minute and pause before we move on to anything else with some questions. Are there any questions on building out little zones and trade planning based off of fibs before we move on to someone else's chart? Take a quick 2-minute pause. When you say are my pending orders manual or system driven, are you asking whether or not I'm presetting these on whatever platform, or if I'm just setting like mental like alerts or setting alerts in Thinkorswim and manually monitoring as we're approaching? Is that what you're getting at? So I personally, I do not set pending orders on the system. I do everything manually. I don't like to relinquish that control. So for me, it's all manual and setting alerts, and just kind of focusing. But I know there are a lot of people who don't have the capability to be in front of the chart as much as I am. So I do know a lot of people who take advantage of pending orders on the chart or on the system itself. Anything else? So this is Tom's chart library. This is the basic structure section. So what we're going to do is I'm going to let's grab the dollar yen out of his 4-hour, and we're going to go through and plan out, I forget how to do this. And we're going to plan out using some fibs. Let's see. Get rid of that from my eyes. And we're going to plan out using some of this stuff, some fibs. Let's see, and this is right at that low, so we'll pull this over. So, similar run up. we've got really no trend we can capitalize on there. But do we have anything here? Got a little bit there. And what does, if we just scoot out to the daily for a second, using his segments, let's fib the whole segment. Okay, so we've got the whole segment fibbed. And one thing that we didn't cover, so the 50 and the 61.8 were already broken, so I'm going to get rid of those. The 78.6 was respected really well, so I'm going to keep that on there. One thing that we didn't cover was the fact that you can, convergence and multiple fibs can be built off. They can be the same direction. Actually, we did, because we did that to the bullish side. But something like this where we hit the 78.6 and we never made it lower, that doesn't matter. We don't have to be trending or breaking past the trend to still be able to leverage the fib itself. So this move is still fibbable, I guess. We could still work with it. 78.6 is the only thing out of this that hasn't been broken yet, though, so let's clear that out. And then let's go back down. So now with this, we've got the higher, or I guess the longer scaled move 78.6 and the shorter scale move 78.6. So if we start to work with this run up that we've got, that's very clean. You can see that we're currently trying to break above that negative 23.6, which we've yet to do. So already we're giving ourselves this little zone to work with here, the 78.6 and the 61.8. And I personally like this better rather than what we had in the other one, right? So in the other, on the Aussie yen, the completions were, if we're, let's just use shorts for an example. So in terms of short, the completions were before the retracement. Here, the retracement is before the completion, which I like better because I like entering on retracements versus if I have the option and I have confluence and they are going to be split apart, I like entering on the retracement rather than the completion. And I like using the completion as my stop loss. So cleaning this up a little, the 50 was dead on perfect. And then coming out of that, that was also dead on perfect. Wow, really like those 50s on the run up. So we've got two 50% retracements. And then just for giggles, let's look at that last movement out of change control. Coming out of this, 78.6 is pretty dead on. Really nice retracements the entire run up. Okay, so this gives us some pretty good confluence, right? So we've got two of our shorter term completions right at the negative 23.6. This is where restraint and also like your plan comes in. Early on, I might have considered, especially given that the 61.8 is probably around there. Yeah, so early on, as we're coming into, let's say this time right here, or this time right here, I might consider taking this as a short with the negative 23.6 as a stop loss and just kind of capitalizing on, like we talked about, the Aussie yen. For me right now, there's nothing here. This is not the entry I want to be taking. There's nothing about it that screams good short opportunity. It's literally just targets, just two targets. Um, so what I'm going to do is I'm just to remove all temptation. If we've got like higher time frame or higher probability targets to the upside with a little bit more to like, then I will often get rid of the stuff that could be a hindrance. So I'm going to get rid of those two negative 23.6, and I'm going to look at this. I'm actually going to pull this down to shorten my zone a little bit. So as we're looking up here, I like, that's a little too shallow. Oh, and that didn't map out right. So I like this zone a lot. There's a decent, we can even just get rid of this because that's not really mapping out with what we want. I like looking short at the 78.6 in the completion, and I like using these two, like the double stacked negative 61.8 as my stop. So, and if we can get another retracement along the way, like if we can break above this level, hit where those two negative 23.6 were, and come back down around here, and give us something else, that would also be ideal. Give us just a little bit more confluence in that zone. With that, I'm going to share that chart. Tom, feel free to plot that into your fib section. I noticed that you, as someone who have done a lot of trading and are very good in your own right in marking up charts, have left the fib section completely blank. So this is also restraint because Tom has just as much reason to be filling this out because he knows a lot about fibs already. But just working with the pace of the boot camp, it's nice to see. So yeah, so I would probably look short here with a stop above here. That's a little zone that we built out, and it really works. It really works on just about anything. So if we look at the ES, right? We're in the weekly. There's absolutely no structure. There's nothing. So if we look at this recent run up, see if we can build just using regular fibs too. We're not going to use advanced or anything, but let's see if we can give ourselves, actually that didn't snap to the top. There we go. Now we've got the wicks. Let's see if we can't build out a little zone on the ES. Okay, so we barely missed the 38 too. And is that going to give me the negative 23.6? Yep. Okay. So even with the ES, right? Just three fibs coming into a really strong zone. If we get that sell-off, that would be great. And then if we do hold something up here as the high, and something around here is probably a shallow retracement that we could capitalize on. I probably wouldn't want to, something like this, I probably wouldn't want to hold for structure. I probably wouldn't want to hold for a sell-off all the way down here. That's 100 and It's almost 200 points. That's like almost the full 200 point run on the ES. I probably wouldn't want to hold for that unless I'm really confident in a swing trade. But back down to some structure over here. But that's all just three fibs in one direction, no advanced stuff. Building out a little zone. So we've got 15 minutes left. That's a good time. We've got 15 minutes left on the scheduled time. First of all, are there any questions? Second of all, I think since Brent dropped Moa, that leaves you since we used Tom's chart, that leaves you for plotting out or working off of working some fibs and building a level off of something from your chart library, if you're okay with that. But while you get set, if you are okay with that, does anyone have any additional questions on building out little fib zones?
Hello, good morning, Mike.
Morning.
Yeah. I'm okay with it. Yeah. Okay.
All right. Good. Thank you. Let me make you presenter. All right. So you should be presenter now. So you should be able to share your screen.
Okay. Okay. US card, I'm gonna try this one.
Go for it.
Okay. Mike, if I ask you, do I need to narrate what I'm doing? I have.
If you can, then that would be great. If not, then don't worry about it.
Okay. I'm trying to formulate here like an a journal, and I got one trend here.
Okay, I like that.
And this one. Okay. Okay, this one, the 78 was perfect. That looks perfect in already the negative 23 was already broken, so I have just to take care of. If I look back like the weekly or monthly, it seems it's all-time high. So I mean, I think there's no structure above.
Yeah, that always makes it tough, but I think you're doing a good job with that channel of building something else. So keep rolling with it.
Thank you. To see here like a mini like trend.
Yeah, that works.
Yeah, okay, okay. Okay, this is the cleanest maybe.
So I wouldn't, just for the time being, I wouldn't worry about doing fib validation.
Oh, okay.
Don't worry about like looking for. The only reason I was commenting on the cleanliness of the tests on the way up is because they were super clean. So you don't need to worry about that. I would actually look that move that you were trying to validate, like from
From here, this one.
yeah, and then pull that up to not quite all the way up. I want to see where the extensions go. Up and to the left just slightly to essentially the high of that move. Yeah, right there.
Oh, okay. Yeah, so it's almost like with the train here. Okay, and I do have like a support. Like I do think I will have made like a zone like maybe here.
Yeah, for now that's a good thing. Let's see if we can't build out any more off of that. So I would clean up that, yeah, just so it gets a little so it's not quite as messy. And then I would get rid of the negative 23.6 too, since we've already moved kind of past that. And then I would actually look at potentially coming out of that 78.6 that you just drew.
Okay, this one.
Yeah, I
Okay.
would look at fibbing that move up and see if you can't get a yeah, so plot that out and then see add in your negative or add in your 23.6 retracement. It's shallow, but let's add that in just to see. So we
Uh,
front run the 38.2 and we get the and we blow past the negative 23.6. So it's not the cleanest, but if you look at what it gives us in terms of a target, that negative
okay.
23.6 to the upside,
Yeah.
um, if you flip that rectangle you've got, since we're already there, since we're already at the bottom of that rectangle, if you flip it to the like just flip it around where you pull the bottom up to the negative 23.6, that to me is a little bit more feasible because that's right where the trend line crosses too. So we're not banking on the bottom of this holding. Like right now, we're not banking on this being a short coming out of this level. Instead, we're giving ourselves a little bit of wiggle room. And the negative 61.8 testing the trend line, I have much more confidence in, especially since we would be using the negative 23.6 to the upside as our stop loss. Um, I like that a little bit, and we could probably work with this even a little bit more. So if you look at that move right there, yeah, if you clean that up and just leave the 38.2 on there, 38.2 and the negative 23.6, everything else is gone. I would add the 38.2 back in.
Okay.
And then if you look at about a third of the way up the move, there's a little dip.
Here.
Yeah, and you get that impulse move. If you fib that out to the same high, so becoming a little messy, but now you see where so
Yeah,
we
it's
get
here.
if you clean that one up, we get the 50, which is nice and clean, and then we get the negative 23.6 right at that same level to the upside. So now you've just added a little bit more confluence right there, and it's still a valid fib move, but that's an impulse move, but that's not something we'll get into just now. So now that gives me a little bit more confidence in that area where there is really no structure.
Okay. I mean, also I was looking like at a possible like maybe long, like maybe a short time long, like here in this zone because I got uh, this train coming from here.
I don't disagree with that, and that's actually that's I'm glad that you went down that route because that's not something that I brought up. But yeah, you don't have to be using the extensions. You can build out these little fib zones with two or three retracements that are all built off. So yeah, I don't disagree with that at all. I think that's a good call.
Okay, thank you, Mike.
The only thing I would caution you is
Yeah.
I like the fact that you're looking at like bidirectional trading and planning like that, but I would not put those, especially where there's a lot of broken hashed lines on this chart already. I
Okay.
would not put your long plan and your short plan on the same chart. I would maybe have two separate charts for it, since a lot of your fibs are marked for targets here.
Okay.
Whereas if you were to look at a long, really what you'd want is to use the current high and use that as like your planned turnover point. So if you were to plan out a long, you'd want to fib from wherever you're fibbing from up to the 28,350 high and then look for the retracements to build off of that. So I don't disagree with the plan, but I would avoid putting them all on the same on the
Okay.
same chart.
Okay. Something that I've written down now. I mean, thank you for that. I understand what you mean. Yeah, I mean, it's kind of you're gonna get clocked even the chart. I mean, some that's one of the things still I'm struggling. I mean, just to make as clean as possible my charts, my markup. But thank you for clarifying for that.
But I think good job. Yeah, it's hard when there's no structure. So I think that you chose a difficult one, but I think that it looks pretty good. I mean, for what it is, that's pretty much every option that we would have coming out of that without getting too advanced. So I think well done. Um,
Thank you.
does it?
Sorry, I mean, I mean, somehow like I'm not good at like narrating things. So I mean, somehow I was kind of a little bit nervous. Even whatever I have in mind, it's kind of I was struggling even to say like I do it. So I mean, if anyway, if I took a lot of time, I'm sorry about that. I'm apologizing.
No, not at all. I mean, it's hard. It's hard to narrate. Um, so and it's hard to do it while you're working through something, especially when it's, not new concepts, but relatively like concepts that you might not be the most comfortable with. So I thought you did great. There's no reason to apologize. It's hard.
Thank you, Mike. Thanks, everyone.
So with that, I don't have anything else in terms of newer newer stuff that we were going to cover. I want people to take some time and build out and actually start to plan out zones on fibs. And one thing that we'll do next week is, or over the course of the next couple of weeks, is we'll plan out zones with fibs, and then we'll plan out, um, and then we will plan out, or plans versus compare plans versus what you can plan out without fibs. So you'll take a look at some of your planning charts and like where you've got longs and shorts set, and then take kind of what we have with our fib plans and compare the two. So with that, for this week, uh, all I want is just as many as you can do or feel okay doing or want to do. Um, Plan out a bunch of fibs just like this. Look for the convergence. Look for lots of extensions and retracements coming together. Look for retracements and retracements coming together. Look for extensions and extensions coming together. But give yourself options and build out little mini zones with those like that give you reasonable stop losses but strong entries. And give a like do some that were in the past, like what would have happened, and some that are in the future and what you can look towards. I mean, if you can put 5 to 6 out there in the submissions channel, that would be ideal. Give some folks lots of things to look at and compare against what others have and see, what similarities you have. But that would be this week for me, what you guys should focus on. So I'll pause. I'll stay on for another minute or two just to see if there are any questions. But if not, then by all means, drop. Give it till 8:31 since I'm not seeing anything jump right in. All right, guys, have a great day. And I will keep you posted with what's coming this week. And again, as I said earlier on, thank you for bearing with me over the next last couple of weeks in the few coming. So uh, enjoy the season, and I'll talk to you guys shortly. I have something else in the Slack channel later this week.